Stats South Africa data shows that consumer inflation edged higher in June. Inflation was 3% in June, up from 2.8% in May. The main contributors to the 3% annual inflation rate were housing and utilities, food and non-alcoholic beverages, as well as alcoholic beverages and tobacco. Between May and June, the CPI increased by 0.3%. To help us unpack all of this, I'm joined now by Dr. Azar Jammine, who is Director and Chief Economist at Econometrix. Doc, good afternoon, and thank you for your time. So it edged slightly higher inflation to 3%. Not too dramatic, but it's still within that band that the Reserve Bank wants to keep it, 3 to 6%. But is it showing signs of concern or the beginnings of a trend?
It could be the beginnings of a trend for purely statistical reasons. And that is that this time last year, fuel prices were plummeting. And so on a year-on-year basis, even if fuel prices were to remain constant at present, you would still see a rise in the year-on-year fuel inflation rate. As it was, for example, in the June figures, we saw the year-on-year fuel inflation rate increasing from minus 14% to minus 11%. In other words, fuel prices are down sharply on where they were a year ago, but not down by as much as they were in the May figure.
And when we look at the, let me call them culprits, for lack of a better word, that contributed in inflation ticking slightly higher, you're seeing housing and utilities featuring there. You're also seeing food and alcoholic and non-alcoholic beverages. No surprises there really, right? Because, for instance, in utilities, there was movement that we knew was coming around the month of July, right?
That's absolutely correct at the beginning of July, but not quite yet, because you're going to see higher electricity tariffs coming in only next month.
Yeah.
That is when they are introduced. These latest figures covered the month of June. The big outstanding feature was the rise in the food inflation rate to its highest level in several months, and that came as no surprise, because beef prices have been soaring ahead as a result of the outbreak of foot and mouth disease and the shortage of beef that has resulted from that.
Let's say a bit more about that. I was listening to a story recently about the increases in beef prices. That's a key component of the story around food inflation. And Dr. Jammine, I was saying to myself, I'm so glad I'm not a big beef eater, because it's becoming increasingly difficult and expensive to enjoy beef. What's driving that?
Well, the big thing is there's a shortage of supply of beef as a result of foot and mouth disease, because less beef is being supplied to the market, because you can't market contaminated beef. So, you know, and it's a substantial portion of the food basket, or a significant portion. And so I from that point of view, one would hope that it's a temporary feature. Although there were other factors that in the food basket that also contributed towards the increase, and that is fruit and vegetable prices. And I can only surmise that that is linked to heavy rains that have been falling in the Western Cape, and also have resulted in an interruption in the supply of those food products.
So if you are in the MPC and you're watching all of this and knowing how, you know, closely and how strict they are about keeping to this band of 3 to 6%, what do you imagine to be the conversation at the next MPC?
Look, at the moment, we're right at the bottom of the 3 to 6% band. The Reserve Bank effectively doesn't look at the band anymore. It looks at one figure, and that is 4.5%, which is the target. And is talking about wanting to reduce that target. It can't do so, the government can, to reduce it to 3% in order to influence inflationary expectations in a downward direction, so that trade unions won't demand 6% pay rises, and companies won't be inclined to increase their prices by 6 or 7 or 8%, but rather by 3%. And in this way, you can get the inflation rate down closer to 3% on a sustainable basis. But, our repo rate at the moment is 7.25%. So that is already 4.25% higher than the current inflation rate. And that's a big margin. So the Reserve Bank does have scope to reduce interest rates further. What is impeding them from doing so right now is uncertainty surrounding what the United States is going to do in terms of tariffs around the world, because that can influence international financial sentiment and cause investors to shy away from emerging markets like South Africa, and that can put downward pressure on the rand. At the moment, the rand has been quite nicely strong in recent months, and that does augur well for the outlook for inflation in the near term. But the Reserve Bank looks a little further out and is also uncertain about the global environment. And in particular, also, we are very dependent on what other countries do to their interest rates. This past week on Thursday, the European Central Bank stopped cutting its interest rates. Admittedly, they're down to 2%, which is much lower than we are. But the other one, the key one that the Reserve Bank will be looking at is the United States Federal Reserve Board, which has stubbornly kept its interest rates high or relatively high at 4.5% for some time. And President Trump is shouting and screaming against the central bank in America. But so we'll wait to see on Wednesday whether they reduce their interest rates. But the common version is that they may not do so, but that we still have the opportunity. There has been a switch in sentiment regarding our own MPC decision. In the past couple of days, we've seen the futures markets anticipating a higher probability that the Reserve Bank could cut rates even this coming week. But it's not a certainty.
I was chuckling as you were mentioning Jerome Powell there, Dr. Jammine, because the kind of pressure that he is under is palpable. It's plain for everyone to see, including the recent contradiction, I think it was yesterday, between himself and Donald Trump. Lesitja Kganyago, on the other hand, doesn't have that kind of political pressure, but I imagine he does have popular pressure from formations such as Labour and the likes, right?
Theoretically, Lesitja Kganyago, I've seen him and watched him and know him well enough. He's a man of his own word. He will not be moved by such pressures if he doesn't want to cut interest rates. But remember, it is a committee decision.
Yes.
He doesn't have the override. He has the overriding. If it's a dead heat, then his vote counts more than the others. But there are other members of the MPC who may decide that this is the right time to cut interest rates.
We're desperate for economic growth, Dr. Jammine. What would be the implications of a hawkish approach to rates going forward versus going for one or two more cuts that some economists are penciling in in the coming months?
You've got to realize that South Africa's economic problems don't stem from tight monetary policy. They stem from very serious underlying structural weaknesses, such as energy, such as logistics, such as crime. And that's another issue that is very important to the outlook for economic growth right now, and this whole spat about how corrupt the police are. But even more fundamental than that is the lack of enough quality education being produced for people to find jobs that and who can add value to the economy. We've got spatial inequalities in the country, people working far from where they live, and that imposes huge costs on in the workplace. And finally, this country's economy is far too dominated by government, trade unions, and big business. Small business just doesn't play the role that it plays in many other emerging markets, and this is stifling economic activity. Small businesses struggle to get finance, and this from the big banks, and this is really stifling economic activity in the country.
Lastly, please talk to this concept of the Reserve Bank. There's been talk of it moving away from that band of 3 to 6%, but choosing a target and sticking to it. Just remind us what that target is and how that plays out in the context of where we started with this conversation, where you have inflation ticking slightly higher to 3% in June.
You've got to realize the Reserve Bank itself doesn't have it within its mandate to decide what the inflation target is. This is a government and a national treasury decision. Yes, they are in talks and discussions about this, but the Reserve Bank produced a paper at its last MPC meeting, which with scenarios showing what would happen to economic growth and inflation should it succeed in getting the inflation target reduced to 3%. And the main reason for doing so is to influence inflation expectations and the actions that both workers and businesses take in the face of lower inflation expectations. And it concluded that if we were to have a 3% inflation target, we would end up having inflation close to 3% on a sustainable basis, not like right now, where the forecast is that inflation will edge back up to over 4% over the coming year. And under such circumstances, it believes interest rates would be able to decline by a further 1 to 1.5% from current levels. So the Reserve Bank has clearly made its mark that it believes that a lower inflation target will reduce inflation expectations, bring down inflation, and enable interest rates to come down more than would otherwise have been the case. And it believes this is better for the economic growth prospects. But it is also adamant that that decision alone is not enough to result in higher, longer sustainable economic growth. We need all those other factors I've alluded to. Municipalities, I hadn't mentioned that. That is proving a critical constraint on economic growth and service delivery, the competence of municipalities. All those things need to be addressed before we get economic growth going back to 3 and 4 and 5%.
Yeah, thank you for that and for your indulgence. It's a fascination of mine, the level of independence and steadfastness that it takes to occupy the role of central bank governor. That's Dr. Azar Jammine. He is Director and Chief Economist at Econometrix.